In this weekly Forex forecast, I'm talking about the DXY, the euro, the pound, the dollar versus the Canadian dollar, and also gold. So this is an incredibly important video, guys, because we have the DXY sitting at a very, very critical spot at 97.70. And what happens there could have massive implications for the Forex market. Now, if you do want my help with your trading, including real-time market updates and also seeing my trades live, be sure to check out the link in the description of this video and save 85% off lifetime access to VIP. So you're going to see my trades live. You're also going to get market updates throughout the day. You're also going to get VIP-only videos and the full course. So I'm the most active one in the Discord group, and there's a reason for that. It's because I want you guys to succeed. And so every single day I'm going to post at least about 5 market updates. We've already had some great trades this week, including those on gold, WTI, the euro, and the pound. All right, guys. So looking at the DXY here on the monthly time frame. So we have the market testing right now 97.70. So this is what we've talked about in recent videos. And just to recap, in case you didn't see those videos, you have this channel here from the low back here in 2011. You've got these lows through here, and currently the market is testing that as resistance. So June broke below it. July is now testing that area as key resistance. So this is a very well-defined channel here for the DXY, and you can see how much the DXY is struggling to get back above 97.70 from this week's price action. And this is really confirming, guys, that if you had any question as to whether or not this level was here at 97.70, just look at this week's candles, right? Every single one, you've got these long upper wicks. Now, at the moment, the market is trading at its highest level so far this week on a closing basis, that is. But still, we're looking at 97.80, right? So the DXY has not broken above this level just yet. So take that throughout the rest of this video, that technically speaking, the DXY, the US dollar, is still below that resistance area, okay? Now, one important factor that did happen this past week, and we talked about this in VIP as well in real time on Thursday's close, but what you'll notice here is that this trend line that we've also talked about in these videos, this is also a very well-defined trend line, and interestingly enough, we did get a daily close above this level on Thursday. So this was the first daily close above this level all year long, even back here. If you'll notice, this move up here to retest this level, the DXY never closed above it, right? We never got to close above it. This candle here opened up here, closed down here. So, we haven't seen the DXY above it until Thursday's candle. Notice this candle right here, we did get the break above that 2025 trend line. So that could be significant. However, at the same time, again, we've got this area through here, right? Around 97.70 up toward about 97.80. That is going to be resistance for the DXY. So whether or not we get a higher US dollar over the coming days and weeks is going to really hinge on what we get in this area. We need high time frame closes above that region to secure the breakout. Now, if we look at the 4-hour time frame, this is what I discussed in recent videos last week, is this down here. Okay, so before the DXY even tested this level right here, when it was up here in this area, I said we could get a fill of this wick or this candle back here and retest this trend line, and then potentially from there get some dollar strength. That's what we got back here toward that resistance area. Now, one thing to keep in mind, you'll notice that we have some blue dotted lines here. And what those are called single prints in TPO terms. So essentially, these are imbalances in the market, okay? So these tend to get filled, especially when you have a range-bound market like this. And so keep this in mind going into next week. Even if we see the DXY break above this area today, that would be significant for the dollar potentially. However, at the same time, you have these imbalances down here that could potentially get filled next week. So what we could be looking at is over the coming days, again, even if the DXY were to break out, we could still see the market come back here and fill in these areas. Okay, so potentially something like this, come down here, test this level again, and then from there, possibly a bounce. All right, obviously just speculating there, not something I would trade like that, because I don't trade speculation like that. It's not about, what will happen. It's about what's likely. And right now, there really isn't anything that's likely. I can't really tell you guys what is likely from here just because the market is so sideways. So really, like I've said in previous videos, guys, what it's going to take from the DXY to really flip this area to support is not a close at 97.80 or 97.85. It has to be convincing, right? We've got to get something back up here in this area. Okay, we need something convincing up here on the high time frames to really flip this region to new support. Until that time, we're looking at a range-bound DXY. Okay, so let's move on here to the euro. And if you guys are enjoying this content, be sure to subscribe to the channel. This content takes hours to make and a few seconds to like. So be sure to smash the like button and subscribe to the channel. Now, looking at the euro here, we have a downtrend so far here in July. Now, if you saw recent videos, guys, what I talked about was the potential for a pullback at the start of July simply because of this May channel. So the month of June closed right up here at the top of this channel, right at resistance. And so July, it looked like we were going to get a pullback. That's what I talked about in the first few days of July. And so far, the market is down about 100 pips. However, the pullback has been pretty tentative. And we've seen this a lot here from these markets. I mean, even this run up back here, you'll notice how many times the euro flipped from green to red here on the daily chart, right? And so we've seen a lot of this so far this year. And this just goes to show that markets are very uncertain right now. And a lot of that has to do with Trump. I hate to say it, but one person is causing a lot of uncertainty here in these markets. Now, looking at something like the 4-hour time frame, what I talked about recently here for the euro is back here in this area. Okay, so let's go back here and look at this consolidation back here for the euro. So you had the highs up here, you had the lows. Like I've said recently, this was technically a bull flag through here that we also talked about at the time. And this right here, okay, this is called an expansion out of a range. So you had a range bound, market here, the euro expanded out of this above 116.30. And what happened here is that we did not get a retest. Okay, we did not see the euro come back here and fill this in. Instead, we got the expansion here, and then we had the lows up there around 116.85 or so. So what this has caused is a single print or an imbalance down here, a sell side imbalance down here around 116.38. Now, whether or not we see that here over the coming days is yet to be seen. Obviously the market has to get below these lows here, which currently it's just kind of hovering around here. And the price action, guys, is really unfavorable. Now, this purple line here, this is what's called the poor low. So in TPO terms, it's essentially an unfinished auction. So what this shows is that a lot of times, especially in a sideways market like this, lows like this tend to get filled. Okay, they tend to get taken out before you get a potential bounce. So what we could get here over the coming days is potentially the euro coming down here, taking out this low, possibly filling this single print down here. Okay, and that would be pretty close to the bottom of this channel, although it is kind of getting to the point where it's a little bit below that channel now. All right, so for the most part, guys, lower highs, lower lows so far in July. However, obviously the uptrend is still very much intact. And this is why it's just a little bit, I won't say confusing, but it does throw a wrench into things because you've got the euro still trending higher, a pretty tentative pullback here, looks relatively constructive. And at the same time, you've got the DXY pressuring an area that if it were to reclaim in the high time frames would be very bullish for the US dollar, okay? So, not great trading conditions. I did put on a short, about a week ago, over a week ago up here in this area, and I shared this in real time in VIP as well. So this was shared in real time, stop up here above the highs, and my target was down here. I did take off half down here at the lows. So it is a risk-free trade right now. And we will see if we get the euro taking out this low down here next week. And potentially, if we do, then I'll just go and, take the rest of the profit there. But for the most part, guys, I think that for the euro and the pound, I think that the shorts, if you were going to short these markets, occurred at the very start of last week. Okay, I think that right now, you've got to be really careful just because it is so sideways. So looking at the pound, let's talk about that now since I just mentioned the short that was at the beginning of last week. And if you guys saw recent videos, we talked about this trend line here off of these yearly highs. Okay, so you can see that right through here, we've got the 2023 high. And this is really interesting because, like I said recently, you've got these yearly highs up here. So even though there are only two touches back here in this area, these are both yearly highs, 2023, 2024. So that makes it a very interesting and also critical level here for the pound. And this was supported by the fact that the pound also struggled through this area in late May and early June. So you can see through here, all these highs through here off of that same level. Now, we saw the pound break above this. And what I said in the last weekly forecast, if you saw that video, I was talking about the potential for a break below this simply because of this candle. It was a very aggressive pullback. At the time, the pound was still above 136.30. However, what I said in that weekly forecast is that a daily close below 136.30 could open up some downside targets, including these two single prints around 135.09 and 134.52. So you can see here that last Monday, we got the close below, Tuesday retested, okay, right here. So again, I think if you were looking for a trade, and this is part of the course that I teach too, this right here, this close, what you would do is you would short on the retest, and then your stop would go above the high, okay? Stop above the high, so your shorts right here, targets down here, okay? And so far, that's played out really nicely. So, the pound has reached that first single print up here at 135.09. Whether or not we see this, we'll have to wait and see, okay, into next week. But if we look here at the daily time frame, go all the way out to the 2025 low, what you're going to notice here is that we've got this trend line off of the low, okay? And this is the log chart, okay? Now, it depends on whether or not you're looking at log or linear here in terms of where this level comes in, because if I switch over here to the linear chart, you can see that you could technically draw this a little bit lower to line up more with these lows down here, right around 134.15 or so. So it really just depends on, what you're looking at. But the bottom line here is that for the pound, this area down here, this entire pocket is going to be a critical support area, okay? And you can kind of see where we're going with this, right? The pound has this critical support area down here. And you look at the euro, it's got a critical support area down here at that May channel support. So this is indicating that if we were to see these markets come down here, the DXY, punch above this area, we could see some bounces from the euro and the pound next week. Now, if we don't, okay, and the pound closes below levels like this, then obviously that would be even more bearish than it already looks with this failed breakout, okay? So this right here in and of itself looks relatively bearish. However, at the same time, you've got the market still trending higher, so you can't get overly bearish at this point, because at the end of the day, you've still got to respect the fact that we're carving higher highs and higher lows. Okay, so this is going to be support down here in this area, right around 134.50, right around that lower single print there. And then these purple lines up here, once again, we've got poor highs up here at this high. You've got equal highs here. So if we look at the 4-hour time frame, you can really see what's happening. Okay, so this was essentially an unfinished auction here for the pound, and we've got equal highs back here. So if I had to speculate, and again, I don't trade this way, guys. I want to be very clear about that. When I draw arrows like this is me just kind of A, having fun, and B, kind of trying to tell you guys one possible scenario for next week, okay? But it's all going to depend on what the price action is showing at the time. That's why, on the one hand, I kind of hate doing this, but if we were to get the pound down here into this area, filling this single print, testing this region down here next week as a support, getting that bounce up here toward this area, we probably see these poor highs taken out. Now, whether or not we see this single print up here at 136.85 or so is yet to be seen, but I do think some of these highs probably get taken out if we see that bounce next week, okay? And then what happens from there is really going to be critical, like I said, because, is this going to be a continuation of this uptrend, or do we get highs like this getting taken out, and then the DXY breaks above 97.70 for good, and we see this rotate lower? And I think that's really going to be the question going into next week. Obviously, I don't know the answer to that right now, and nobody does. Okay, but for the meantime, guys, again, 134.50 is going to be support. You've got some poor highs up here that could get taken out next week following a bounce from this area. And if it breaks down, like I said, that could be pretty bearish here for the pound. Now, the dollar CAD, guys, pretty interesting chart here at the moment, although I'm not interested in it just yet. And this should be pretty quick, though, because it's a clean chart. There's not a whole lot to talk about, but it could still be profitable if it sets up. So on the one hand, guys, you've got the market just consolidating sideways, right? But on the other hand, you could look at this and say, well, if the DXY, if the US dollar does break higher and we see some bullishness finally from the USD, then this right here could be a W pattern, okay? Now, if this is a W pattern, we need to see the market above 137.40. And at the same time, you can see we've got this sell side single print down here around 136.20. Okay, so looking at the dollar CAD, this single print down here, I don't know if we're going to get this or not. But if we do, that could be potentially a buying opportunity only if the US dollar stays constructive. That's a big if, obviously. But you can see that recently we've had this market going sideways. And you can see that back here, we had the downtrend, we had sideways action, expansion out of this range. The market never tested this area. So if next week, if we get the DXY pulling back here into this region, now ideally, I'd like to see this market close up here and break above 97.70. But if we were to get that, and then a quick sweep of this area down here, and then the bounce, that right there, guys, could also give us the dollar CAD down here into this pocket before the bounce. Okay, so again, just speculating, guys, not something I would trade right now as it stands. But if we were to get something like this, that could be really interesting for a move back there toward resistance. Now, obviously, if the DXY does, break down and can't break above 97.70, then that could be different. Okay. The other thing here, the second thing I want to talk about before we move on to gold, is that this is really interesting. The fact that with 139.13, or technically 139.14, this single print up here, if you take a projected target of this W pattern or a double bottom, it's essentially the same. a projected target of this range gives you a level exactly at 139.14. So that could be coincidence, but a lot of times in my experience, that does provide a clue, a potential clue on where this market could be going. Okay, no guarantees, but that could be a clue. Now, again, for this to confirm, for this pattern right here to confirm, you'd have to get the market back above here. It'd have to reclaim this on the high time frames. If it does that, though, then levels like 139.14 could come into play over the coming days and weeks. All right, so I know it's a lot, guys. Hope you're hanging with me. We have a lot to cover, though, in these markets. Okay, so let's talk about gold here, because last weekend, what I talked about was this channel right here. I'm going to draw this quickly because I've taken it off since then. But you can see that we had this channel through here, okay? So off of these highs and lows, we had this channel. Now, last week, I made a video talking about this support area. We had a buy-side signal print up there at 33.17 that, you know, as I said at the moment, could serve as a target for gold. And sure enough, we did see that market come up there, you know, and tag that area. Now, this around 33.22 was resistance on Thursday. Okay, so this was essentially a 6-day composite of the value area low. In TPO terms, essentially, guys, that was resistance. Okay, and you can see where gold did kind of pull back from here, consolidate through here a little bit. And when I told VIP members, and again, this is the benefit of being in VIP, is on this candle right here, this 4-hour candle. So you can see that we had the close above, we had the close back below. Right here on this candle, what I told VIP members was that if we saw a reclaim of 33.22 into the daily close, that could open up the open gap up there at 33.69 from June. And this is the exact level I had on my chart at the time. And this up here was a poor high, okay? And these tend to get taken out, and also gaps tend to fill. So you can see that we got the 4-hour close above 33.22, okay, the daily close as well, and retest as new support here, and a pretty stress-free trade up there toward 33.69, okay? So looking at today's action, we're seeing the market, you know, we saw the market, I just posted this in VIP, actually, as gold was literally right here. I talked about the fact that it did close that gap from June. Okay, so you can see open gap back here, and this reclaim on Thursday is what triggered that move to close that gap. And again, poor high up here, which we tend to see those taken out. Okay, so all of this checks out, right? Everything looks great. Now, this is resistance here for gold. Where this market goes, though, because obviously we've seen, you know, on Friday, gold and the US dollar move together, which is a bit of an anomaly because typically they're inversely correlated. And that tends to happen when you get a flight to safety. But at some point, though, that inverse relationship is going to prevail, as it has for years and even decades. So the big question is, looking at the DXY, can the US dollar break out from here? Okay, can it sustain itself above here? Even if we get a dip next week, it doesn't matter. If the US dollar can really start to break out, then I think we see gold, you know, continue to pull back here. And the reason for that simply comes down to what we've talked about previously on the weekly time frame. Okay, so you can see that going back to the 2025 low, again, this is significant because this was the 2025 low down here off of this candle. So you can see several touches through here. We've got this through here. We've got this one and this one. And what you'll notice is that we did get a weekly breakdown. Okay, we had the week close below, and now it's resistance. So we've talked about this in the past few videos, and this is kind of why I thought that we could get a return to some of these lower levels. Okay. Now, obviously no guarantee. However, at the same time, you've got to respect what's on the chart, especially the high time frames. And right now, the weekly chart is still showing a breakdown. So bottom line, guys, I think that this is going to come down to what we get from the US dollar going into next week. But also at the moment for gold, we've got 33.69 as resistance. We've got support down here being that 6-day composite that we've talked about. So, you know, essentially when you look at this here, you've got this low down here, you've got these highs. And so this is essentially a range right now for gold. And the mid-range of that is right there around that 6-day composite. Okay, so I think that going into next week, you know, possibly a pullback here from gold from this area. And this down here around 33.20, that's going to be support followed by those lows. Now, obviously, if we see the market break out above here, sustained break above this, then you're looking at a move back there towards some of those highs and potentially up there toward 34.30. Okay. So resistance now, though, on that gap fill, I think, though, you know, just my opinion, but I think if you're trying to short this now, first of all, we're going into a weekend, not a great idea. The second thing is that, you know, we're probably going to see the market hang around here a little bit going into Monday. So even if you miss this initial move, like let's say that this does rotate lower into next week, even if you miss this initial move, gold is likely to fill wicks like this going into Monday. Okay, so there are typically second chance opportunities. So again, just my opinion, not telling you how to trade, but I would be very careful about trying to enter a market, especially one as volatile as gold, going into a weekend. And that's especially true this year with everything going on with tariffs and everything else. So that's it, guys. I think that we had some great opportunities last week. Hopefully we get some nice opportunities next week as well, especially if the US dollar can reclaim that critical area. All right, I hope this video has helped. Be sure to join us on VIP. Check out that link in the description for 85% off. If you're on the website, click on that join VIP link. Have a great weekend, and I will talk to you again next week.